Hello, welcome back. Hope you're doing well. We're gonna chat a bit about Alibaba, and Alibaba is obviously a company that is been the interest of a lot of investors, whether they are talking about it from the short side or the long side. Now, Alibaba has lost a lot of its stock value, really. It's been almost like 60% of its value that Alibaba has lost in the past few months. And lately, in 2022, the company has been doing much better, especially amidst all this stock market flash and this semi crash, really. Now, I wanted to make this video to point out a few interesting things about Alibaba here, some interesting metrics and some interesting realizations that you need to make and know about before earnings. And earnings report for Alibaba is going to be, I believe, on the 8th of February. It's definitely February. I think it's on the 8th. So in about 3 days. And it pays to understand some important concepts about a company that has been massively beaten down. When that happens, analysts that are providing estimates for what the company is going to be doing next quarter tend to be much more conservative, and that happens because the company has missed previously, more than likely missed in previous earnings, and also it has been going down in value, and so they kind of tend to be much more conservative with their estimates. And when that happens, it's actually fertile ground for potentially having a stock and the price of the stock shooting up massively. And so I wouldn't be surprised to see an earnings report that is moderate in terms of how good it was, and still we get Alibaba stock shooting higher. Now, obviously, I cannot really know what's going to happen. It could even go lower. But if that happens, I'm probably buying more myself. And I'm going to explain why. So, expectations for revenue and earnings growth are low, making it likely that Alibaba delivers better than expected results is what I talked about. And Alibaba's free cash flow growth is underpriced, and this is something that I absolutely love to see. Is my bread and butter. I love free cash flow. And when there is more free cash flow than the company is worth, really, in terms of if you give it a modest multiple, then I'm a definitely net buyer of that company. And so Beijing's softening policy stance is also a very interesting thing here, and pays to know about, because the whole downtrend for Alibaba has basically started because of this sort of like informal trade war between the US and China, and these regulations, stock market regulations, some other companies getting delisted like Didi, and there has been a little bit of fear for Chinese stocks, really, for the numbers and everything. Now, you see, heading into earnings, expectations for Alibaba are very low here. And yes, in part this is deserved, as you would expect. Growing political risk, one of the big reasons, and there has been a lot of discussion and many articles written about these things. But you see that Beijing's change in attitude towards China's largest companies indicates a softer policy approach. And so Alibaba could report much better earnings and free cash flow because of it. Very interesting to know about. Now, the free cash flow margins and price to free cash flow ratio here, you will see that the article is mentioning that the e-commerce market in Southern Asia is growing even faster than the Chinese e-commerce market, which gives Alibaba a massive opportunity for expansion. So that's very good to know about. Very interesting that Alibaba has still some prime opportunities for expansion here. And some of the interesting things here that the article is also discussing is assuming Alibaba's free cash flow margins remain stable and around 10 to 12% in the foreseeable future, Alibaba could add between 2.5 billion and 3 billion in free cash flow on top of that annually moving forward. So this kind of addition of free cash flow for Alibaba is pretty neat, because I believe they were doing like 30 billion or so. So that's not negligible at all here. And applying a free cash flow margin of 12% to Alibaba's expected revenues, the firm could see up to 19 billion in free cash flow next year. All right. So, as the article also points out here, this increase in free cash flow does not seem to be priced in the valuation of Alibaba, which is nice to see. And as we have discussed in our previous videos, Alibaba's free cash flow price to free cash flow ratio about now is about 17. Yeah, this is what we have estimated ourselves, and we have actually calculated that. Some of the risks with Alibaba obviously is mostly about the political risks for the most part. I'm not really concerned too much about their revenues and their earnings and their profit, but I am concerned about political risks. And I wanted to point to this article as well, which is again from an article from Seeking Alpha, discussing some details about Alibaba. And there were some interesting things that were looking very, very interesting here to know about. First off, you will see that the author is mentioning that compared to the US tech, Baba is outperforming. And I don't know if you have noticed that. You may have missed that, because you were looking at Facebook and all the other companies losing a lot of steam, maybe apart from Google or so, and Amazon. Amazon did well as well. But on the same day that Meta platforms actually was going down like 26%, like a couple of days ago, Baba actually rose, a modest 0.48%, but you would expect it to decline, and yet it rose. So this shows relative strength for Alibaba, which is very, very interesting to see. And also the fact that Charlie Munger is still holding the stock, another very, very interesting thing. And he has actually doubled his stake twice on Alibaba, which is very, very interesting to know about as well. Now, one of the interesting things about this article that I was reading here and about Alibaba is about taxation. And actually, let me find it here, because this was a very, very interesting point. Yeah, one factor we can look at is taxes. We know that Alibaba is going to face a higher tax rate this year than last year. So the company actually lost its key software enterprise status in 2021. And so they used to have a tax rate of 10%, and now this year is likely to be 24%. So this is a massive increase. This is not really great. So I don't know if you were aware of this, but it's very, very important to understand that there's going to be a little bit of a tax increase here, and it's not negligible at all. So that's important to know. Now, the risks that I wanted to mention here. What are we scared? What are we scared of in terms of Alibaba? A miss on the top line being the revenue, like a miss on revenue. Now, that doesn't scare me too much. I mean, revenue of Alibaba is generally speaking very strong, but it could actually, a miss on revenue, it could bring the stock price lower. But the stock is actually so cheap right now that it doesn't scare me, because it's still making tremendous amounts of free cash flow, and a miss on revenue could bring the stock down temporarily, but on the long run, it doesn't really affect the fact that the company is making massive amounts of free cash flow, unless it keeps going down and down and down, which I don't think that's going to be happening anytime soon for Alibaba. Now, competition is another thing. Obviously, competition is out there for every company. Tencent is one of the companies that's potentially a competitor, but it's not a huge deal for Alibaba right now. It's a behemoth, and so I'm not really concerned about the competition for Alibaba. What is the most concerning is probably the continuation of the Chinese regulatory crackdown. That is probably the most concerning thing. That's because the most important reason why this has happened for Alibaba is the involvement of China and the involvement of the US in terms of the trade tension between the countries and some regulatory concerns, things of that sort. So it's about politics really that are a little bit concerning here in terms of Alibaba. But in terms of their operations, I'm not concerned at all. And to finish off this video, I wanted to point something in terms of the financials of Alibaba, which is very, very interesting to see. And I want you to notice here the sales of the next 12 months sales of Alibaba, which are depicted on this blue line over here, going up and up and up and up and up, and kind of being a little bit steady here, but still massively higher. And then notice the price, the stock price of the company on using the black graph over here. And you will see that the stock price was actually kind of diverging with the sales for the most part. But now they are there is a far difference in between, far of a difference in between this, much of a difference really, in between these two lines here. So, they are getting further and further apart. And so at some point this is supposed to normalize a little bit, and they should also kind of diverge a little bit. And the way to diverge is either the sales abruptly go down, which is not expected because this is the next 12 months projection, or the stock of the price of the stock actually goes up, which is more than likely what is going to happen in the long run, I feel. So this is what I wanted to point out with this video. Hopefully you enjoyed it and it helped you, get some ideas about what's going to be happening with Alibaba. Now again, we don't know what's going to what the reaction is going to be when the earnings report comes out. We never know that because it's there are multiple parameters that can affect the market sentiment and how the market is going to react. However, we do know what we're seeing in terms of the numbers, because the numbers never really lie. And so thank you for watching this video. I hope you enjoyed it. And in the meantime, take a look at this one that I made earlier about NVIDIA. And again, thanks for watching. I'll see you soon. Bye bye.